It's a really interesting question because there's this chunk of uranium coming from Cameco, coming from Kazatomprom, coming from other Kazatomprom JVs, right? So that'd be Uranium One and Orano and a couple of Chinese entities, Japanese entities that that is hypothetically available at a certain price point. And we will work through that price point within this contracting cycle. And it's probably going to happen sooner rather than later.
Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. As you can probably tell by my background here, we have our resident uranium expert, Justin Huhn, back on the show. Justin, thanks for coming back on the show.
Good to be back, Steve. How are you?
Just great. Okay, we got a lot of listener questions. Got a lot of feedback. I don't know that we're going to be able to get to all the questions, but we'll get right into it here. Okay, first off, URNM, their dividend plan. Previously they set up 2 years of dividends, and then in 2022 they put an ex dividend date out there, set the payment date, but no dividend has gone through. Do you have any idea what happened with that?
Probably had to do with very little gains.
Okay.
There was nothing really to distribute. Yeah.
Okay.
Yeah. 2022 was pretty much. I mean, URNM was actually down on the year for the year. So, yeah.
Okay. No profits to share.
Exactly.
Okay. Mutant Reef asks, Justin, can you explain how SPUT is going to unravel in the future? The design to add more shares when selling at a premium cannot last forever. At some point, SPUT will go out of favor, and without a plan on buying back shares or selling down the U308, this seems to have an issue.
No, not necessarily. That is yet to be an issue. That's basically their plan. You know, they make money on management fees, and their prospectus is not about accumulating uranium at low prices and selling at high prices. That's not what they exist for. They exist to hold the uranium and give investors exposure to holding the commodity itself, not to arbitrage and trade the commodity. That's not what it exists for. So that's their plan at this point. They would actually, if they were to sell uranium in the future, that would actually have to go to a shareholder vote, and the shareholders would have to approve by a majority that the trust does in fact sell the uranium. I find it hard to believe that would actually happen, considering that shareholders of this trust and basically of anything in the sector understand you know, the effect that would have on the market for SPUT to be able to come in and sell some of the pounds that they're holding. So it's unlikely that that's going to happen in the future, in my opinion.
Okay, that was one of
as
my
of now,
thoughts.
when they traded a discount to the net asset value, that's basically an opportunity for investor to buy pounds cheaper than you could in the spot market, essentially. And that's been, you know, as of now, every single time that's happened, that's been an opportunity to buy that dip. And that's what SPUT wants the market to understand, is that when that trust trades at a discount to NAV, that's your opportunity.
Yeah, that's the way I look at it. I look at it like I'm literally trading American dollars for a commodity, and I don't want them to sell it.
Yeah, exactly.
Yeah. Okay, Douglas Green, we're very, very thankful for your insight and help for us lesser people. How come no more Uranium Insider on YouTube? You've always been my favorite person in uranium, and we're missing seeing you.
I'm going to pick that up again next month. So I don't know if I'll be able to pull off doing it every week. I'm shooting for at least twice a month for the free podcast to go back on YouTube. Just been a few month hiatus as I've transitioned towards doing the daily videos for Uranium Insider subscribers.
Okay. KL193 asks, what happened to the recontracting the future supply of uranium to the utilities?
I don't actually know what he's asking there. Recontracting? I'm not sure.
I asked as a follow-up, and then he said future supply of uranium to the utilities. I was kind of hoping you understood the question, because I did.
Future supply of uranium to the utilities. I don't know. Is he asking just about contracting in general? What happened to that? To long-term contracting? I mean, I suppose I can answer that because I don't really know what he's asking with recontracting and future supply. Not sure what he means by that, but I mean, just to give you an idea about what the term contracting outlook is looking like right now, 7 weeks into the year, we have over 45 million pounds signed this year so far, year to date. UXC is one of the primary nuclear fuel consultants. They're reporting that there were and are, but this report came out, let's see, 2.5 weeks ago or so. In the month of January of this year, there are more pounds under consideration, basically in discussions between buyers and sellers for term contracts to be signed that they expected to be signed this year than were signed in all of 2021. And that was just in the month of January. So that was more than 70 million pounds. We expect that this year is going to be above and beyond the replacement rate of contracting, which would be about 185 million pounds for the year. So we would not be surprised to see us breach that considerably for the entire calendar year of 2023. Term contracting cycle is just starting. I would say last year was year one of what's probably going to be a 5+ year contracting cycle.
Okay. Joker64 asks, given McCarthur River and Cigar Lake are ramping up production to a level that will enable them to satisfy their long-term order book, can it be extrapolated how many pounds are left annually, even if it's an average, before they have to put up the sold out sign for those two mines?
Yeah, yes, it can be, and it's probably less than you think it is. So we've understood for quite some time that Cameco's contract book essentially had pounds signed already committed to in the future that that consumed the bulk, if not most, of what is left to be produced at Cigar Lake. Now they did talk about working into further phases of Cigar Lake into the future beyond the assumed 2028 closure date for that mine. But you can extrapolate out the life of mine for McCarthur River and take a certain percentage of that. So it's a really interesting question because there's this chunk of uranium coming from Cameco, coming from Kazatomprom, coming from other Kazatomprom JVs, right? So that'd be Uranium One and Orano and a couple of Chinese entities, Japanese entities. That is hypothetically available at a certain price point, and we will work through that price point within this contracting cycle, and it's probably going to happen sooner rather than later. So Cameco is probably not going to get to a point where they say, hey guys, we have nothing left. They're going to be intelligent about the way they sign those contracts. So they're only going to sign so much at a certain price before that price point starts to go up considerably, and they're not going to completely commit every single pound that is possibly available. They're going to be wise about that. So an extrapolation, you can say, let's say 18 million pounds a year coming from McCarthur River going out for the next 10 years. And most of Cigar Lake, if not all, during that same time frame, has already been contracted. So let's say Cameco maybe has 150 million pounds coming from all of their mines that might be available for contracting, and beyond that, it's going to get a little bit tight out there. And Kazatomprom, same thing. Half their uranium goes to China, full stop. So they also only have so much to sell. So Kazatomprom, their nameplate capacity, not the 100% capacity, is already about 50% of the 100% capacity, and then half of that goes to China. And so there really isn't all that much when you zoom out and look at it, it's going to be available at the prices that are being signed right now, which are we're probably looking at the low to mid 60s for the term price right now.
Okay. This is from Iron Wang. With Cameco completing their largest single contract ever with Ukraine, it is for UF6. Does this mean Cameco conversion book is now full? And how is Ukraine going to enrich all this UF6 if not being able to use Rosatom?
No, Cameco still has some conversion capacity going out into the future from Port Hope. As far as how they enrich it, they'll enrich it either with Urenco or Orano, which are the two primary Western enrichers.
Okay. This I thought was kind of interesting. John Crandall, to what degree does automated trading, AI and algorithms, integrate positive statics of the uranium sector, the fundamentals, factor into daily trading of uranium equities, i.e., is such trading blind to whatever fundamentals of any particular sector? So I think he's asking, is AI being used in, to my knowledge, 90% of trading is done by computers, and they're watching moving averages just like you and I are, and placing buy and sell orders according to them. He's asking if any fundamentals, if these computers and AIs are able to get into any fundamentals to execute trades as well.
Gosh, that's a question I have no idea how to answer. I think that AI probably has very little, as far as algorithmic trading, has very little to do with the movement of the sector, although it has something to do with it, I'm sure, some small percentage. But I think you could look at it in another way, which would be that the algorithms that are written by human beings, as far as how the trading algorithms should react to what they're seeing on the screen, that's essentially programmed by human beings, and human beings are not only fundamental investors, they're also technical traders. So there's always going to be technicals that influence the way that the stocks move. That has absolutely nothing to do with fundamentals. So when you see the bulk of the stocks in the sector, especially the large caps and the ETFs, move in a bullish manner and move above rising moving averages on increasing volume, you're going to see, momentum beget momentum, just like you would in any sector.
Okay. Yeah, I know I've seen stories come out, just through Wall Street Journal or whatever, and it seems like the movement of the stock is so fast. I don't know that a human could do that. Maybe they could. Maybe there's guys that are just with their finger on the button. But if that would be considered an AI fundamental, maybe computers are scouring the internet or something for stories like that, and they just react. I don't know. But
that's possible. I suppose I'm a little bit skeptical with that, just because the uranium sector is so small. So I don't know how much attention that would attract on that front. But also, a lot of times when a story comes out from, let's say, Wall Street Journal or Bloomberg or something like that, there's somebody that's in the know prior to that story even hitting the screens, and that volume can start to, just volume begets volume.
Yeah. I know I heard a story by Robert Kiyosaki. He used to own an oil company, and he was at lunch with his partner, and they found out, oh my God, the stock dropped 70% in the last 15 minutes. What happened? We haven't even gotten the results back from this last drill. And his boss kind of laughed his buddy kind of laughed because he'd been through this before. And he's like, oh, well, that means we didn't hit anything. And he's like, how do you know? He said, well, there's a guy with a cell phone right next to the drill. he made his calls.
Right. Okay. Yep. Sounds about right.
Yes. Okay. This is from Truck. Why are increased rumors of long-term contracts bullish? Are most uranium producers not already valued against the Numerico forward curve? And if utilities are looking in more volume for longer terms at those prices, why is there an upside in uranium producer valuations?
There's always an upside, especially when you're looking at an incredibly small sector. I mean, you can just look at some historical context, of course, and see that the sector was vastly more valued in the previous bull market, especially at the peak, right? We got up to 150 billion, and we're sitting here at 35 billion. The sector is still very small. No, I don't think most of the stocks are pricing in a forward curve based on Numerica's spot price. It's bullish because the long-term contracting cycle, you can actually model out where you expect the price to go and how many pounds you expect to be signed under those contracts. And so understanding where we are in that cycle is important. If you knew that we were towards the end of that cycle, you'd take a different picture at the sector than towards the beginning, regardless of where the valuations are at. So looking at where valuations are at now and understanding last year was the first year in 10 years where we signed 100 million pounds or more. in long-term contracts. And we expect this to jump up in volume and continue for multiple years. And we see this sector as being extremely strong for many years based on other fundamentals, just looking at life extension likelihoods for a lot of the reactors that are operating now. I'm looking at what appears to be early stages of a renaissance for this energy source. So yeah, there's much more to come for this sector, and just watching America is kind of not really. I mean, it's something that we always do, of course, just looking at the daily movements of the spot price, but that's something we recommend that most people don't do, because it tends to influence your thinking on the sector. If you read a number of bullish, let's say, fundamental developments, and you do some work on the fundamentals, and then you see that the spot price is flat or it's down 25 cents, and you might be thinking that, oh, that's negating your thesis because the spot price moved down 25 cents, and like absolutely nothing could be further from the truth. The spot market is so small. It's so small relative to the term market. It's the market where entities go to dispose of excess inventory. And that's such a small amount of pounds, especially right now. It's just not a lot out there. And so it's a surplus disposal market. That's basically what it is. It's not the real market for uranium. Now, of course, that's what everybody watches. So in that way, it's relevant. And it's also relevant because that technically can be the market reference in terms of contract deliveries and prices paid upon delivery. But the real market is the term market. So that's why it matters. That's the real market. And that's knowing that last year was year one, of what's probably going to be 5, 6, 7 year, cycle for long-term contracts of replacement rate levels of contracting, and then some. The potential for the price to vastly overshoot to the upside of that marginal cost of production, $75, $85, $90 a pound, whatever it is these days, inflation adjusted, is very, very high, that we overshoot that. So that's I guess why it matters.
Okay. Wolfgang Wust. Justin, could you shed a light on Kazatomprom's effort to finding routes circumventing St. Petersburg in Russia? From what I know, they started sneaking through Azerbaijan to Iran's Bandar Abbas terminal to get their stuff exported. Best regards from the country overcoming baseload energy.
That's hilarious. They've put in a good effort. They continue to work on that route. Yes, my understanding is similar to yours of how they've been able to make that west, but there's it gets pretty complicated in that exact zone that you're mentioning. Certainly it's looking more promising to send pounds east, and much easier to send pounds east. So the Chinese have just established the uranium warehouse right on the border of China and Kazakhstan.
Oh.
And that warehouse is going to be a trading point for the Chinese for uranium, as well as a place to stockpile uranium. They potentially may, there's speculation in the next 10 years or so, they might even build a conversion facility there as well. And so it's entirely possible that going forward, that there's going to be more swaps coming from Kazatomprom through the Chinese, in which the Chinese that might hold inventory in another location that's easier to access towards a Western customer can actually take delivery from Kazatomprom, and then have a swap, basically, just a change of hands on paper at a different location. That's already happening a little bit. It could happen more in the future, but I think Kazatomprom is going to continue to work on making that Western route more robust and more reliable. I don't think that's going to go away anytime soon, because I think that the folks at Kazatomprom understand that the route going through Russia is getting increasingly more complicated, not less so. So yes, it's still not a slam dunk. It's still problematic, but they're probably going to keep working on it until the point where it can be more reliable and more quick for that Western delivery.
Okay. All right. Justin Ramsberg. Justin, love your work. Can you please help me understand how, if we're in a structural deficit and inventories are depleted, How is it possible to be contracting? How is it possible for contracting to be percent higher to multiples of annual production? Last cycle, there was supply from multiple sources, but not this time.
There's still supply from multiple sources. Utilities can buy essentially from any producer at this point. Western utilities are self-sanctioning from buying conversion and enrichment and EUP from Russia for the most part. They're still taking deliveries of those previous contracts, but a structural deficit is basically just a snapshot of a point in time or a period of time. So to look at a single year, calendar year, understand that nuclear utilities on a global basis are consuming X amount of uranium based on their operations, and then taking a look at what's being produced. But what's being signed is not for this year's consumption. So utility that's signing a contract is going to, let's say, Cameco, for example, and saying, hey, I need U3O8 delivery from 2027 to 2032. And so that's why you can have a structural deficit in a single year, like this year or last year, for example, and you can have contracting go far above and beyond that level of consumption by those global utilities and far above the level of production in any given year. So the fact that producers are only producing X amount of uranium this year doesn't mean that they won't contract out more uranium production in the future. So yeah, it's a little bit complicated, but that's essentially how it works. It's also the fact that the total production that's assumed to be produced in a future year that current contracts are being signed for is not yet consuming the expected production for that year, right? So you might have X many pounds signed this year, but those are signed for multiple years out in the future. So if a utility buys 1 million pounds for 5 years delivery, that's booked as 5 million pounds signed this year, but those deliveries are spread out over multiple years.
Okay, that makes sense. Okay. From Rick Fool, Kraken, they're a very new miner, drilling stages of an old 1950s Nevada mine. So this one's in the United States, which feeds into the narrative that East versus West, at least this one's in our backyard. Over the counter is less than a year ago, so they're very new. Market cap is only 16 million and daily volume is only 100K. Is this even a company that could participate in this next uranium bull run, or are they too new? Do you think it will even be a mine? Their shareholder distribution is 60% retail.
I'm going to refrain from commenting on specific companies just out of respect for our paying newsletter members. But I'll just say that any conventional mining project in the United States is going to have some type of toll milling agreement with the only operational mill that exists in the United States, which is Energy Fuels White Mesa Mill. So whether or not it can be a mine, they need a place for the ore to go. And that agreement will have to be signed. As of now, the only company that has a toll milling agreement with Energy Fuels is Consolidated Uranium. The other thing I'll say is that we believe that there's going to be a premium on United States pounds in the future. There's a lot of support right now for all things nuclear in the United States. So, and it still remains the largest nuclear fleet in the world. We just saw, there's news yesterday, the day before, that Constellation Energy, a couple of the plants that they manage, in fact, one of those plants was set to close in 2021 and was saved, at the stroke of midnight. Now they're uprating that plant. They're going to put in multiple tens of millions of dollars in investment into the plant to be able to uprate its power generation, which means it's going to be consuming more fuel. So the U.S. fleet is looking very strong at the moment, and we'll likely see a lot more life extensions. And we believe that there's going to be a premium on pounds produced in the United States. There's going to be a resurgence of uranium production in the U.S.
Okay. Leonard, I'm going to say Leonard D. Leonard, I don't want to butcher your name. Uranium usage and contracting seems to have a 2-year cycle. The fuel cycle is 2 years from mine to usage, and inventories are as well. From summer 2020 to about summer 2022, uranium inventories were being used up and removed from the market instead of swapping around. Now it seems that we are in a transitional stage with all eyes looking to see what the outcome from all the positive news and info. Here's the question. Do you see the next stage coming soon when someone starts to say, is there enough uranium available to fill the contracts? Putin told his State of the Union, in his State of the Union, that Rosatom should prepare for more nuclear weapons. Shouldn't this be a signal as well for the West to sanction Rosatom?
I think the West, let's say the West is putting a lot of different countries under one big umbrella, and I think it's a little bit more complex than that. So, if to break it down a little bit, it's unlikely that the EU is going to sanction Rosatom entirely, and I'll tell you why. There's a lot of Russian-designed reactors in the EU, and essentially only Rosatom can certify license extensions for these plants to continue to operate when their licenses come up. So that's one big reason why Rosatom is unlikely to actually get officially fully sanctioned in the EU. In the United States, I believe that it's likely that there will be sanctions on Russia, but there are likely also, if that happens, going to be waivers for the existing utilities who have legacy contracts for especially enriched uranium coming from Russia, to be able to continue to receive those deliveries for a period of time. Maybe that's another 5 years or something like that. So the sanctions are likely. I apologize. I feel like I missed a portion of that question, but at the core of the question had to do with sanctioning them.
It says, do you see the next stage coming soon when someone starts to say there isn't enough uranium to fill the contract? So I think he's basically like, is Rosatom going to get sanctioned, and what effect does that have on us?
I mean, whether or not they get sanctioned, the fact that utilities are already not signing new contracts with Russian entities for conversion or enrichment or enriched uranium is already having the effect on the sector that we believe is going to continue. And that's just essentially a bifurcated market. And it's Western enrichers until capacity is expanded, which is going to be multiple years. If they do expand, they're likely to expand, but they're going to need a lot more enrichment contracts, are already signing these future contracts at much higher tails assays, which means a big jump in uranium demand. So the next leg, I don't know exactly what to call that or when to call that. I suppose we're kind of already in that. As far as the 2-year cycle go, yeah, it's more about 18 months. It depends. If it's a dry mine and has to go through a lot of international shipping, it could be more like 2 years. But the fuel cycle is 18 months, to 2 years on the long end. Inventories are historically speaking relatively low. And according to our own models and the models of other industry folks that we communicate with who have done as much or more work than we have in the sector, there's likely to be a point in the later part of this decade where there's insufficient uranium. And the only thing that's going to get us past that point is sustained higher prices. Sustained is the really important word here, because this marginal cost of production that's pushing, probably 80 plus. Dustin Garrow, managing director of Nuclear Fuel Associates, he's basically saying the marginal cost of production is probably $90 plus a pound right now. Doesn't mean uranium price on Numerico hits 90 and all of a sudden the sector reverses. Like, that's not going to happen. We need prices that high and higher for a long enough time for development projects to sign into contracts, prices at that level or higher, to get that uranium into the market. That's years and years of prices that high. And that's why we think the sector is going far higher than that, because once you get up to those levels, and probably even before that, we're going to see financial speculation that's going to push the price to places that don't make sense for the sector anyways. That's probably going to happen. But yes, as it looks now, there's probably going to be a point in the later part of the decade where we're going to need to see every single project that's on the margin get into production. And even the projects that are absolute moose pasture that need, who knows what cost of uranium production or cost per uranium in the market to get those projects into production. But yeah, it's looking, it's going to get thin out there for a moment in time, and it's only going to take sustained higher prices to essentially drive an exploration and development cycle as well. And so that's part of this, right? There's one thing is there's just the contracting cycle, and that's the thing that we focused on a lot. But there's also going to have to be an exploration and development cycle that goes along with this, and that follows the price movement. It doesn't happen before the price movement. There isn't speculation in mining development. Okay, there's speculation in exploration, but that really has a lot to do with capital cycles, and there hasn't been a lot of mining exploration for uranium for the past decade or so. So the development of pounds that have been discovered and the exploration for pounds that have not been discovered is going to have to increase as we go further out into this decade. And that only is going to happen with supportive capital markets, and especially prices that are far, far higher than they are now, to actually incentivize somebody to go out and do that work. Mining is really, really, really hard, and nobody is going to do it to break even. That's just not how this world works. So yeah, prices have to go above 90, probably $100 a pound. They've got to stay there for quite a while in order for this sector to get anywhere near balanced for the later part of the decade.
Okay. I got some questions that I think I can consolidate here kind of basically into one.
Sure.
Okay, so I had I met Warren Irwin up at the VRIC. I did a quick interview with him. I can put that in the notes below. And his basic argument was, it was interesting because he got on the stage with Rick Rule, and kind of two polar opposites for the sector. And it was interesting because he essentially issued a warning, and he said, so he lived through the last uranium cycle, made a lot of money with Next Gen, and he was a big what's the word? He wasn't a fan of Cameco's acquisition with Westinghouse. I watched one of the recent interviews that he was in, and he said there is no shortage of uranium. He said there's 50 million pounds that magically hit the market every year. He said that between SPUT and Yellowcake, they bought up, he said 70 million pounds, but looking on their website, it looks like 80 to me. Maybe that's semantics. You know, what do you see here with that? You know, with these 40 to 50 million pounds for the last 7 years magically hitting the market. You know, he's saying that there's that much of a deficit every year, but where's it coming from?
Well, just to correct a couple of those numbers, SPUT has purchased about 42 million pounds. So they acquired UPC that was already holding 18 million pounds. So they're now holding just over 60 million. Yellowcake has an option to buy $100 million worth of uranium every year. Off the top of my head, I'm forgetting how much they're holding. I apologize.
I saw
they don't buy
19 million.
19 million. Yeah, they don't purchase consistently a lot of pounds every single year. So they purchased 0 last year. They already came in and purchased $75 million worth of uranium this year. So they have a bit more to go. A couple of things. So the uranium that has been sold into the market, I suppose, hasn't just magically come from nowhere. There was a big oversupply of uranium in the previous decade. And this came from Fukushima. Obviously, after Fukushima Daiichi, they closed down Japan and shut off all of their reactors. 10% of global demand gone within a 12-month period of time. Germany shut down a handful of reactors following that. Yet production continued to increase during that period of time. So there was an oversupply for many, many years. And what that led to essentially was a few 100 million pounds of oversupply. A lot of that went to China. And what didn't go to China was above ground mobile inventory that basically was available for carrier traders to move through or to move to the market, right? And so we saw that especially towards the later part of the last decade. A lot of pounds went through the carry trade. So traders would actually sign midterm contracts with utilities. Utilities could avoid going to Cameco and avoid going to Orano and avoid going to whoever else to sign contracts. They could just go to a trader, and a trader would make the whole process very easy. Because the producers would essentially need to incentivize their own projects in those contracts. So they were often at higher prices than what the carry traders could offer. So they could say, okay, well, I can go into the spot market for $25. I'll sign a contract with you guys at 32. I'll add my cost of carry and my cost of capital, a little bit of profit. Bob's your uncle. That happened over and over and over and over and over. Okay, so just to give you a little bit of context here, what has happened to the carry trade in 2021, the carry trade accounted for 20, it was about 25 or 30% of total spot market volume came from traders fulfilling those short and midterm contracts through carry trade. 2022, that dropped to 3%. So this is basically over. It's over for at least for now, until we have a more, let's say, an easier interest rate environment for traders to profit from, and or a fast, a quickly increasing term price where the market can be arbitraged a bit, the difference between the spot and the term price, where the traders can take advantage of that. But as far as there being a lot of above ground mobile inventory for traders to sell to utilities, that essentially is gone. Now, that doesn't mean that there isn't pounds here and there that are sold into the market. In the spot market, of course, there is. The spot market is not a vault that all we do is buy from it until it's gone. It's not an entity that just holds pounds that, and then once that's gone, it's gone. It's a market where, like I said, it's a surplus disposal market. And there are producers that will have surplus going forward. That's, BHP, for example, their Olympic Dam project in Australia, primarily a gold and copper mine. They produce about 8 million pounds a year of uranium. And that uranium is a byproduct. And they just sell that into the spot market. Or they sell at spot, short-term spot reference contracts, but they don't really care. They sell it at market prices. They're happy to get what they get because it's excess, it's surplus. Okay, they're not a competitive seller. And then the other thing you have to look at is you have to look at what has happened with the price. So if there's all of this excess uranium coming into the market every year magically, why have we gone from $18 to $50 a pound? Okay, commodity price does not increase in a market that has excess surplus. That doesn't happen. Period. It doesn't matter what the commodity is. If there's an excess of supply, price goes down. That's what happens in commodity markets. It's commodities 101. So basically, we've seen the price go from 18 to 50, and it's going much higher. And it has to do with the fact that we're working through that surplus. So, and we also know what happened last year, or excuse me, the year before with SPUT, especially when they came in really heavy after the ATM went live, right? That was August, September, October, into November 2021. We saw something happen called the reverse carry trade. This is where carry traders that were holding pounds on their books, the spot price moved up so quickly that they were able to sell some of their held pounds and get them off their books, sold them at whatever, 45, 50, 55 bucks a pound, come back into the spot market, or come back into the market and secure midterm deliveries from other producers at lower prices. So you still had producers signing term contracts that were lower than what they could sell in the spot market for. So they could make a quick buck on this, and they did. And that fulfilled a decent amount of SPUT's purchases during that period of time. So that was sort of this synthetic capacity that came from this reverse carry trade. As far as just the inventory comments, yes, there's a lot of inventory out there. There's north of 1 billion pounds, possibly even pushing 1.5 billion pounds of inventory currently sitting above ground, U3O8 equivalent. So that's across the fuel cycle. That's U3O8, that's UF6, that's EUP, that's fabricated fuel. So U3O8 equivalent, 1.5 billion pounds globally. Sure. Guess who holds that? Strategic nations and nuclear utilities that need it for their operations. Okay. Utilities don't sell uranium. They're not uranium sellers. They just aren't. That's not their business.
Got a couple years supply sitting on site that they're going to use to feed the plant.
Their business is selling electricity. That's what the utilities do. They don't sell uranium. Now, in some cases, if a utilities reactor is shut down prematurely and unexpectedly, and they have excess inventory, they can sell that into the market to the extent that it's sellable. If you're sitting on fabricated fuel, usually you cannot sell that because it's made for your unique plant. If you're sitting on UF6 or U3O8, that's ubiquitous. You can sell that into the market. That has happened. Probably will continue to happen a little bit, but we're talking a couple million pounds a year or something, maybe coming from the Japanese. And what are the Japanese doing? They just did a 180. The Japanese are net buyers, and they're going to be continuing net buyers going forward. So If there's £1 billion to hit the market, I don't know where that's going to come from. I literally do not. So we'll have to see where that's coming from. But as of now, when purchasing happens in any sort of reasonable volume in the sector, the price moves up. That doesn't happen in an oversupplied market. So you don't even need the evidence. That's your evidence. Okay. So the price is in an uptrend. That doesn't happen when there's excess supply. It just doesn't. So if excess supply comes in and knocks the price down, we're going to see that, and we're going to know where it's coming from. And I'm telling you right now, I don't know where that's going to come from. And most of the time, when markets get to a point where this price starts to move really quickly, and we will get to that point, inventory is held more tightly, not less tightly, because especially by utilities. Utilities understand that there is a supply shortfall when you get into a rapidly increasing price environment, and they don't dump their pounds then because they become more valuable. And that's just not something that happens, and it's not something we're expecting to happen. But, as far as Warren Irwin goes, I like Warren, and he's done very well. He bought NextGen pretty early after their initial discoveries. He understands mining. He understands deposits very well. He manages money. You have to put everything into context, right? If you're managing money and you're already sitting on very, very large paper gains, you're going to lock in those gains at some point, and you need to plant your flag somewhere to do so. And he's doing so. More power to him. Doesn't bother me at all. It makes a market.
Right on. Right on. Cool. Well, you got a heart out. Real quick, last question. Steve Mueller asks, what is your favorite backyard crop you were growing?
Steve, how you doing, my friend? My favorite backyard crop I'm growing right now. Well, it's February right now, so in the ground currently is the winter crops. I'm gonna have to turn those in pretty soon. I don't have a huge property. I have a small property. I have basically a large backyard garden right now. But I started a lot of seeds of some stuff I'm excited about. I'm trialing a bunch of hybrid cauliflowers, trying to find the best cauliflower. My wife eats a ton of cauliflower, so I want to grow a lot of cauliflower for her. Gosh, what did I start that I'm excited about? I'm growing a lot of hyssop. I really like hyssop. It's a great medicinal herb and just a beautiful flower. I guess it's probably the broccoli and the cauliflower that I'm trialing. Just a bunch of new hybrid varieties that I got from Johnny's Seeds, which I love.
Right on. Cool. All right. Well, thank you, Justin. That was very informative. And I always enjoy our discussions. You can
It's my pleasure.
Check out everything, Justin, uraniuminsider.com. There will be a link in the show notes, and we will talk to you next time.
Thanks, Steve. Take care.
Thank you.